Well, hello and welcome to another video. And today I'm going to be covering a topic that I'm asked about increasingly frequently at the moment, particularly by people who are thinking of leaving the UK, and that is, are exit taxes coming to the UK? And I'm going to be answering that question, and we're going to be looking at if they do, what they might look like, and we're also going to be wondering how much warning we might get if exit taxes come in. So, without further ado, let's just think about firstly what are exit taxes? Well, what I mean by exit taxes is a tax that is payable if you cease to be a UK resident. And quite often, this is something like a deemed capital gains tax. So it will be relevant, for example, let's say you had a crypto portfolio or something like that. What they'd do is they would look at the unrealized gain, and then they calculate that unrealized gain, and then they'd charge capital gains tax on that if you left the UK and became a non-resident. This could also apply, for example, to other shareholdings, even possibly to assets inside your ISA. um, so effectively, the government treats it as if you've cashed everything in. So it's that's why it's called a deemed disposal, because then you're not actually cashing it in. It's just a deemed disposal, as if you had how much the tax would be. So the UK doesn't have an exit tax yet, but actually plenty of other countries do. So maybe this is a bit of an indication of things to come. So other places that have them are, for example, the USA has them. Canada actually has particularly nasty exit taxes, which are based on that sort of capital gains tax. France, Germany, Spain, Netherlands, and Australia also all have exit taxes already in place. So across the EU, and in fact internationally, exit taxes are becoming increasingly normal part of anti-tax avoidance rules and a way of incentivizing people not to leave the country where they're living. So if you're holding shares, crypto, or other business assets, and you're thinking that you might leave at some point to avoid realizing those gains and being taxed on them, then this is obviously quite an important thing to consider. So, as I say, the UK doesn't have them yet, but it does seem to me like they're getting closer. We've already seen some significant changes recently, like the remittance basis being abolished, for example, and obviously a shift to a residence base for inheritance tax. So now it's a 10-year tail if you are leaving the UK before you can avoid inheritance tax on your worldwide assets, which is a really big change. And in a way, that's kind of an exit tax in itself, because the inheritance tax is still going to be payable for 10 years after you've left. So thinking about it, sort of Rachel Reeves, the UK Treasury, are struggling for money. So, of course, imposing something like exit taxes must seem very, very tempting for them. So, I think the direction of travel is clear. I don't think it will come in the next budget, but it might. But I wouldn't be at all surprised to see it actually before the end of this parliament. So I think the most likely model is that capital gains tax charge on a deemed disposal of shares, crypto, and investment assets for people who are ceasing their UK residence. I don't think it will include real estate, UK real estate and land. I think that'll stay as it is because non-residents are already taxed on that. ISAs and insurance bonds, yeah, quite possibly caught unless they're specifically exempted for some reason. I don't really see why they should be. So if you've made large gains, or rather, if you've got large pregnant gains, I should say, and you're planning a move abroad, potentially with a view to avoiding the tax on those, then I think if you wait too long, you can expect HMRC to want a slice of those when you leave. So, are we going to get warned about this? Are you going to have some heads up? Well, honestly, I don't think you probably will. Governments don't tend to pre announce their anti tax avoidance measures. Why would they? It just gives people an opportunity to kind of plan around it. So, there wasn't really a great deal of notice on the changes for the non dom reforms and the 10-year tail on the inheritance tax. Normally, when there are changes in taxation, you find that they're imposed on either budget day or beginning of the next tax year. So, what am I saying? Should you panic? Maybe you should, to be honest. I mean, obviously, if there's no intention of you ever leaving the UK because you've got family ties there and things, then this isn't really something that you need to consider because you're just going to carry on paying the UK taxes. But if you thought that at some point in the future you would leave to avoid inheritance tax, to avoid significant CGT, particularly, as I say, on something like crypto, then I think you need to make a start on planning now while the window remains open. You need to think about where it is that you might go to live. Are you going to come and live in the Isle of Man? Would you go to Dubai or somewhere else? So you do need to think about that in advance because obviously moving from one country to another is not straightforward. There's quite a lot of work that needs to go into planning that. So the further you look at it in advance, then the better. So my advice would be to start getting advice now, not after the rules change. If you leave it too long, then I think you're probably going to find that you haven't got enough time to look into it and change your place where you live before the changes come in, or else the changes will just come in and you'll still be in the UK and it'll be too late anyway. So I hope that's helpful. If this episode has raised any questions for you or your clients, then feel free to get in touch. Always happy to have a consultation free of charge. So the contact details, of course, in the description below. I'm Martin Katz, and my company is Katz Co. Thank you.